So you're thinking about buying a manufactured home. There are things you have to consider that make buying a manufactured home totally different from buying a traditional stick-built home. So the first thing you have to recognize is manufactured homes built prior to June 15th of 1976, you can't get a loan on them. They were built under different construction guidelines, and Fannie Mae, Freddie Mac, FHA, VA, they do not finance properties built before June 15th of 76. So if you see a property that's a really, really great price and it's an older manufactured home, double check on that. The second thing is it's harder to qualify buying a single wide versus a double wide or a triple wide. So just be aware that depending upon the loan program that you're looking at, typically a double wide and a triple wide is what you're going to more commonly see, and it's what you're going to be able to get financing on. Now, a lot of people are looking for buying manufactured homes because they're affordable, and they are. But one of the biggest things people misunderstand is there's a huge difference between buying a home that you're in a park and you're renting the land versus buying a home where you own the land. Here's the biggest reason why that matters. First of all, the type of financing that you get. Secondly, the monthly payments that you're going to be paying. Now, what do I mean by that? Really simple. If you're buying a home in a park, it's not a real estate loan. You're not buying the real estate. You're renting the land, which means you have a higher monthly payment than just the payment on the home that you're buying, because you have to pay the payment for the home you bought and you have to pay the rent payment for where the home is parked. But it's not a real estate loan, therefore the guidelines are different. It's called a chattel loan. I don't do chattel loans. You've got to Google chattel loans. There's lots of lenders out there, but the rules are different. I don't know of any down payment assistance that goes with chattel loans. There's a lot of down payment assistance options that go with buying a manufactured home that is on land that you own. But the key is that it has to be permanently secured to the foundation on the land that you own, and it has to be detitled from the DMV. What the heck is detitlement? Basically, when a manufactured home rolls off the line, by the way, there's three terms: manufactured, modular, and I can't remember the third term. Anyway, whatever, prefab, manufactured, modular, and prefab. They mean a little bit different things. One of them has an axle and tires, and some of them are on a flatbed truck. But for the purpose of this video, I simply want to use a general term to describe all three of them and calling them manufactured homes. When they roll off the assembly line, they basically have a license plate stuck on them. They've got tires and an axle, and they're registered with your local DMV. So you have to unregister them from the DMV because it's no longer a moving vehicle. Now it's real estate. So you have to unregister from the DMV, you have to put it on a permanent foundation, and then you have to get the state that you're in to title it, to change how it is treated so that it is legally considered real estate. At that point, in California, by the way, a document called a 433A is issued. And when the 433A is issued, then you have real estate. Now you have a property that you can finance with a traditional mortgage using down payment assistance. I've got programs that can allow you to buy a manufactured home with no money out of pocket. You can get a credit from the seller for closing costs. You can get down payment assistance to cover the down payment. Just be aware of the fact that manufactured homes are considered a higher risk in the eyes of Fannie Mae and Freddie Mac and FHA and VA. So what does higher risk equate to? Higher cost, higher interest rates, higher fees, unless the manufactured home has what's called the Manufactured Home Advantage sticker. So a Manufactured Home Advantage is something relatively new. Only Fannie Mae and Freddie Mac are recognizing this, but basically they're saying, hey, a manufactured home that was built recently to this higher level of specifications, that home gets an endorsement called the Manufactured Home Advantage sticker, and from a lending perspective, we treat it like a single family home. So you don't get any of the extra interest rates or fees that come with manufactured homes. You don't get any of the extra rules that come with it being a manufactured home. But obviously it has to be real estate. It has to be on land that you own. It has to be permanently secured to the foundation, and it must be detitled so that it is considered real estate. As a side note, if you're doing an FHA loan on a manufactured home, you have to get an engineer's certification. So the engineer goes out, they inspect the property, they inspect the foundation, and the engineer certifies that the foundation is in fact meeting FHA's guidelines. So that's critical and important. So bottom line is manufactured homes are a great opportunity as long as you understand what you're getting. If you're buying in a park, you're not doing a regular real estate loan. You're going to see super low prices, and you'll see a payment on Zillow that says, hey, you can get this manufactured home for $110,000. And you look at the payment for that and say, wow, that's super cheap, I can afford it. But you have an extra $1,000 a month you're paying in space rent. So that space rent depends on the park that you're in. But you are not getting the payment you thought you were. So just be aware of that fact. One final note, if you're thinking about building a new or installing a new manufactured home onto land that you already own or land you want to buy, I can do that too. And I can do it with as little as 3.5% to 5% down. So I can use normal, traditional, conventional loans, FHA and VA loans to help you pay for the purchasing of the land, the preparation of the land, that's like well and septic, and for the purchase of the manufactured home, and for the cost to install the manufactured home. I can pay for all of that. We just take that grand total, you pay 3.5% or 5% of that grand total, I finance the rest of it. So if that's something that sounds like a good idea to you, or if you have questions about anything related to buying a manufactured home, please give me a call. I would love to guide you through the options and help you understand how you can make your dream of home ownership a reality.